Hi, everybody. Welcome. I'm Ken Kirschenbaum. Thanks for joining our webinar. This is the first webinar we're having in our 2022 series. There's going to be a lot of them. So far, we've only advertised 4 of them, but we have a whole bunch that are already set up. I just haven't put them on the list yet. And we're still adding. So we'll probably be doing it right up to the ISC show. So today we're starting with Tony Smith from Security Funding Associates, and he's going to do a presentation on funding alarm companies, which is a niche. Some of you have, if you've tried to get loans from banks, you've probably run into a roadblock. Most banks aren't familiar with lending, especially if it's the alarm business and accounts that you want to use as collateral. So that's pretty foreign to most banks. So Security Funding specializes in the alarm industry. Tony will give you his own background and tell you how long he's been in it and what their expertise is. But and I'm not sure what other options he's going to talk about, but I'm going to leave that up to him. He for some reason his camera's not working, but we're going to turn over the presentation and hopefully his screen will be working. Okay, so with the help of Irene, who's been yelling at me all morning, click on here.
Yes, click on his name.
Well,
Right click.
Right click, okay. Tony, I'm getting ready to turn this over to you to make you a presenter. And here we go. It's going to be your screen on here now, and you're in charge.
Okay, can we see the screen and everything, Kim?
Oh, great, there you go, you came up. By the way, everybody, if you send in questions, type them in as usual. Tony, I will either interrupt you or wait till we're done before I hit you with the questions. And that's it, okay? So you're ready to go? I'm gonna mute myself right now, okay?
Okay, thank you.
Good luck, take care.
Okay, our audio is working fine. Let's just make that question.
Your audio's fine.
Okay, and we've got a little problem with pictures, but that's okay because you can see the slides, and that's what it's all about. Good morning, everyone. Thank you for joining us today. I hope this is a worthwhile contribution to your financial education. As we all know, COVID-19 has dictated a lot of changes in business in general and specifically in the alarm industry. We've also had a lot of changes in the banking profession relative to the alarm industry. And we'll get that slide up. And that's what I call the bad news. In 2005, 2006, the financial community in our country encountered a massive bloodletting and recession. This lasted through 2019, and then we got hit by the pandemic. Our industry lost significant financing capability, and over half of the major banks, such as Bank of America and Citizens Bank, have left our industry. Several major dealer purchase programs have gone through bankruptcy and restructuring. As always, there are those that are unable to meet the challenges of the recession and the pandemic and the supply chain disruptions, which are hitting us now and causing a very late delivery of equipment. These companies are going to sell, and likely at a discount. Now, as we enter 2022, the asset carnivore of inflation has reared its ugly head. But it's not all bad news. The good news is our industry is very resilient and able to adapt to changes and challenges. The top 100 security companies have, with some exceptions, found other resources, primarily private equity, to replace the banking community. Larger companies with access to bank or private equity are continuing to make acquisitions. Dealer purchase programs like My Alarm Center and Alert 360 have merged to provide better customer coverage. Consumer loan financing has now come to the fore from companies like Aqua and Synchrony, which have made loan capital available to small, medium-sized dealers. We fall into that category. Only we are calling ourselves specialty financing for customer growth and attrition control. Our new secret sauce is to bundle alarm installation fees and monitoring fees where we deliver a new level of customer transaction and satisfaction. What does this mean? It means that we take for either 36 months or 60 months the monitoring fees, add them to the installation fee that you're about to bill a customer for, and we finance both of those together as a single amount. So in effect, you're collecting your monitoring revenue in advance, either 36 months or 60 months. You will earn substantially more than a dealer program. Dealer programs traditionally will give you about 35 times after you factor in the recourse, cancellations, and the credit adjustments. We give you approximately 50 plus multiple. This is a significant increase in your cash flow because you get it all at one time. Right when the deal closes, you will still own the customer contract with no chargebacks or recourse other than if one of your salesmen commits fraud. We provide additional benefits. Excuse me. A savings on billing expenses of up to $90 for the 60 months period. That's a big number when you start looking at individual accounts. A possible savings of $1 to $2 a month on monitoring costs, depending if you use one of our specialized central stations. A possible saving of $1 to $3 a month on pass-throughs if you're using one of our pass-through agreements. Now, there's no charge for SFA management oversight of the customer transaction. We provide funding for a large variety of projects, just about anything you can think of, including audio and video, access control, integrated projects, camera systems, smart home systems, alarm installation, and we are beginning to look at solar. We also provide a service that the banks that we've selected really like. We provide an attrition control process that allows us to watch each customer that's why we have specialized central stations. That we watch each customer through the life of the loan in order to monitor it for possibility of attrition. If the customer does not pay his bill, we get notified by the lender, and then we go to you, the dealer, and together we find whatever the problem is and we solve it. If for whatever reason we can't solve it, let's just say the customer has lost his job, then it'll be a chargeback that you're not responsible for, no recourse. So that's what the bank is in there to absorbing the risk in situations like that. Now, what are our specialty programs? We have two. The first one is 0% interest and no down payment for 60 months or 36 months. This is our most popular program. It is due to our dealers' recognition that their customers love holding on to their cash and paying for the service as they use it. Back in the recession period, when we first took a look at at these kind of loans, the customer was paying for the loan, and they were paying the monitoring as separate payments. They didn't like that. They stopped paying for the monitoring, and guess what? They found out that the equipment loan was worthless if they didn't have monitoring. So they dropped that. The attrition was terrific. So we've figured out a way to combine the two. That's our so-called secret sauce. The secret is to sell a single bundled monthly service contract. A 5-year agreement would have a 5-year renewable clause normally. Now the dealer is on his way to 90 months or more of providing alarm services to that customer. Now let me stop for a minute and say, what are the agreements that we're going to have in place? Well, needless to say, the bank has a consumer loan contract with the customer, and that's going to have all of their terms and conditions. We should have a Kirschenbaum contract in place that for that same time period, and indicating whatever amount the monitoring is, and so that at the end of 5 years, all we do is get renewal on that contract. So it's very important to have a monitoring contract that we know has all of the correct terms and provisions, and a 0% interest and no down payment consumer loan contract with the bank. And keep in mind that that we're only working with banks. We, instead of finance companies, they've got a little deeper pockets, and they understand a long-term program like this. It takes a while to build in any vertical like the alarm industry. Now, how does SFA help its dealers? SFA's Easy App dealer application gets you through our due diligence process within just a few short days. We offer a 20% equipment advance. In other words, if it's a big camera job or a access control job, and you need an advance in order to be able to afford bringing the equipment on site, we will provide that for you. We spent a lot of time providing you dealer platform training for your work with the consumer. Yes, you show them a computer, and it's got you put their name on it, and they fill it out, and their credit is checked. But you've got that management of that computer interface takes a little training. We provide that fully for you as we move through the process. We will also finance equipment only if you don't want to finance the monitoring, or there is no monitoring for some reason. We will do that. Our range is $1,500 to $15,000 for the consumer loan, except for our second loan package, which is renters. We'll cover that in a moment. Dealers receive quick funding in 3 days. That's pretty good. SFA was founded by alarm dealers, so we understand your problems, and we understand the solutions to those problems. My partner Jim Miller and I have been in the business, each of us, for 40 years, and so we think we've got a handle on it. And I was president of the California Alarm Association a few years ago as well. So I know what it's like to work with a variety of alarm dealers and get them to do what's needed to do the right thing. Now here's our second marketplace, which is the rental marketplace. The rental marketplace is a very different marketplace, to the point where the security industry ignores it. They don't want the attrition risk, and correctly so. Those that have tried have been burned. So the dealer in this case continues to own the contract. The initial contract term is 36 months. We only do wireless equipment, and you'll see why in a moment. And you add the monitoring for the 36 months. This is a smaller transaction, but it gets the customer into your program, and he's now one that will eventually become a homeowner. There are no chargebacks. There are no holdbacks. It's a zero down, zero APR for 640 plus FICO. This you can charge more for metals because the market is yours. What I would do is charge a little more on the monitoring and give them your regular rate on installations. Your market here is rental homes, rental apartments, college residence halls, and office buildings. Now here's one of the things that makes this a very good deal for the customer and for you, and that is since everything is wireless, you offer free system moves when they relocate to another apartment. And we've done some research to back up why we think this is a good program. And 30% of apartment renters eventually end up owning a home, while you're on the track to keeping that customer when they eventually do buy the home. And you can extend things to 5 years, and you again move that wireless equipment in to give them a head start. Another thing that we learned in our research is that the fastest growing market segment is seniors, and they're going to be a significant part of this market segment, and they are already used to paying for alarm systems in their homes, but they've sold their homes, they've cashed out, they're in a retirement mode, and they're concerned about medical and not having to spend a lot of money on housing. So they've signed on to an apartment, and they now need security, and you can provide them with this program. And to my knowledge, we are the only alarm financing system that will permit rentals into the program. This is the contact information for Ken and for me, and for, you see also the central stations that we are working with that are offering us a discount. iDefend is something we'll teach you about when you come aboard as a dealer. So the secret is to go through the due diligence, become a dealer, and then we will train you to go through each and every step of the way. And we will have to change the way you do business to the extent that we will be talking about only, you'll be selling the monitoring and an installation amount combined. So instead of selling $35 for monitoring and $2,000 for installation, you'll be selling $60 for both. And the customer is going to like that because there's no down payment. Next, are there any questions?
They want a brief overview of iDefend.
I will give you a brief overview of iDefend. It is we have a relationship with a cybersecurity company in Visas, and their product iDefend is a product that will provide $1 million to bring you back from identity theft that you might be subjected to. This service is free. And we will provide that to any dealer that gets into the loan program that has a cybersecurity issue or thinks they want to finally begin addressing it with their customer base. You will get basic coverage at no charge, no additional charge.
Well, is that just a sort of like a backup insurance plan without it being actually insurance, or are you providing some kind of cybersecurity software that gets installed at either at the dealer level or at the customer level?
Good question, Ken. This is just a basic coverage. You got $1 million, you can do nothing, and if you have identity theft, you know you've got $1 million of insurance in effect to go and fix the problems that resulted. There is a slight upgrade that comes in if you want to get some of the software that we can put in that will protect your computer. And we can get into a more active campaign. And
well, this is for the dealers. This is for the dealer's protection, though, not the dealer's customers.
No, this is for the dealer's customers.
Okay, so they're offering cybersecurity basically to the dealers.
Right, but we're also offering it to the dealer. That'll be free as well, except for the up.
What kind of contracts are the customers signing? What do they look like? They're signing a regular alarm contract, which hopefully they're getting from me, a standard form agreement. Let's say a residential all-in-one gets signed, calling for installation, monitoring, service. What are they signing on? What bank papers are they also signing?
What you mean? Well, they signed a bank agreement that's a traditional consumer loan agreement, just like you'd sign with your car or do a home improvement. So if you want to add a heating system or replace a heating system in your house and you need financing, it's the same contract. That's why it's inadequate in my view, and I think in yours, to support my security.
Okay, but now the amount that the customer is financing is basically covering the cost of the installation of the system.
That's correct.
Okay, it's not covering
including the monitor.
Well, so it does include the anticipated monitoring charges over the life of the contract.
Yes.
Okay, so let's do a residential deal. So it's $3,000 to install, and it's $30 a month for 36 months. So you got $1,080 for monitoring, and you've got $3,000 on an installation. So you got $4,080. That's what the alarm contract looks like, right? And then the bank papers come along, and the bank says we're going to finance $4,080 for you.
Correct.
Okay, and customer signs the papers. The bank will advance how much of that $4,080 to the alarm company?
The alarm company gets, if it's a 36 months deal, they get a discounted at 20% amount. If it's a 60-month deal, it's discounted at 25%.
All right, well, let's stick with this 36-month deal.
They get one of those two amounts.
Well, wait a minute. Is the installation also discounted 20%?
No. Well, the total amount gets discounted. So
the total amount is okay. So in this deal, it was $4,080, and the alarm company is going to end up getting 80%. So the alarm company gets $3,264.
Right.
And the customer winds up paying the bank what?
Exactly. Yeah.
$4,080.
Right.
So they'll see it as $4,080. And of course, the bank papers are going to have the Fair Debt Collection Practice Act disclosures, not Fair Debt Collection Practice, the disclosures that are required on a loan, letting the customer know what the interest rate factor is on the transaction.
There is no interest rate. That's what I'm trying to tell you.
So the bank doesn't show that then.
Yeah, there's no interest on that 4,000, and the customer sees that, and there's no down payment.
So the customer is being presented with what it believes to be an interest-free loan.
That's right, because the interest has been shifted down with the discount.
Okay, listen, I'm not gonna opine on that because I don't know. If the bank's comfortable with it, then I'm comfortable with it. So is the alarm company going to be comfortable with it? And the alarm company also, I think the really important feature here is there's no recourse to the alarm company. We're not talking about a fraud situation. But there's no recourse. So if an alarm company has a history of 5% attrition rate, I guess the bank's prepared to eat that attrition rate.
No, here's what happens. The reason why this is the banks like this, and as a security person, why we should like that is that the attrition rate changes dramatically. You are not going to walk on a home improvement loan. You are not going to walk on a loan on a consumer loan contract.
Well,
you will
wait,
walk on a monitoring contract, but you won't walk on a consumer loan contract.
That's the expectation from the bank. The bank doesn't anticipate. But if there is a default, if there is attrition, the point is that the bank deals with it. It does not come back to the dealer.
If put it together this way, yeah, the bank gets a significant discount, okay, but the bank is also paying for the billing and collections, and they're absorbing the recourse.
No, that's a different issue. We'll get to that. But the main thing is the bank. That's an important issue, which I think you made clear. The bank, there is no recourse on these loans. So once the bank has approved the transaction, and I assume they have to approve each transaction.
Yes.
Once they've approved it, the alarm company is going to get their money, and that's it. Now, the next question is, the bank is going to be billing the customer, correct?
That's correct.
And the bank is billing the customer in the bank's name or the alarm company's name?
It'll be in the bank's name as a function of the fact that it is a consumer loan product.
Okay, so the alarm company, if it enters into a service agreement with RMR, would that be paid directly by the customer to the alarm company?
No, at least in my view, no. There may be some other sides to it, but whether it's a service contract or a monitoring contract, that'll be the language that's in your contract, if you will.
Yeah, well, wait a minute. Is the bank going to finance? Is the bank going to finance based on all RMR? So I thought they just financed the monitoring. Are they going to finance the service plan as well?
Yeah, if that's bundled in, we can do that.
Okay. All right, but there'll be a 20% hit on that number, which is fine because all the alarm company needs to do is calculate that in its price. If it knows it's taking 20% hit, it counts for that.
Ken, let me tell you how you handle the discount. Keep in mind that I said that whatever your monitoring amount is, that's your amount that you're going to charge. And when you go through the analysis to determine what that monthly amount is going to be that you sell to the customer, you can add some additional monitoring dollars or installation dollars to that monthly amount so that you can pick up, say, 5 to 10% of that discount and add it back in when you create what you're going to be charging the customer. And keep in mind, this goes on all the time. It's not unique to what Jim and I are doing. You see it with home improvement loans. You see it with selling furs, jewelry. It's all appliances. You look at I know that Jim has a history of these kind of loans. There wasn't monitoring involved, but these kind of loans where you have zero interest and zero down payment.
Well, let me ask you this: the bank is not taking a mortgage on the home, are they?
No.
Okay.
No, but the bank has got a pretty strong credit relationship with the customer at that point.
Incidentally, what is the credit score that the customer has to have to qualify for the program?
Well, it's 6. I think in my presentation here, I've got 640, and I think that's a typo. It should be 680 plus.
A 680 Beacon score.
So we do have secondary financing sources, but they won't do the combination of monitoring and installation, but they'll do the installation to handle the lower credits. But our focus really, and the bank isn't going to do business with anyone except it's in the upper credit ranges.
Okay, now let me ask you this: the bank is going to collect these payments monthly, whether it's for 36 or 60 months. The bank is going to pay the central station.
No, and I'll get into this in a minute here. But no, we pay the central station. We get all of the funds after the discount, and we pay the central station for the 3 years or 6 or 5 years.
Yeah, what do you say? When you say we, I'm talking about you as the bank. The dealer isn't paying the central station. The bank's paying the central station.
SFA does it. And that's one of the reasons the bank likes us. They don't want to be in the business of paying monitoring fees. They don't even know how to spell monitoring.
So security funding, you're acting actually as a servicing agent for the bank.
Right. We provide oversight and service above and beyond what is expected of anyone, and that is that we keep an eye on whether the account is being utilized by the customer, on whether they've got service problems they're not being addressed.
Well,
and then we go in and take care of it. So we're helping.
Let me just ask you this, because I want to try and understand your model. So the customer now is sending you the money. A security funding gets the money, not the bank. It's payable to security funding, I take it.
No. The bank funds everything for that full amount, that 4,000 amount.
Yeah.
And they send us the money out of of the discount. They send us the money that goes to the dealer, and they send us our portion of the discount that is used to pay the monitoring and any pass-through fees, so that we're 100% paid up, and it won't be for lack of the monitoring payment that account goes south.
Well, so let's call it your management fee or commission or whatever you want to call it. That number that bank gives you is going to be sufficient for you to pay for the monitoring charges to the central station.
Correct.
over the life. So you've got to deal with the central station, and let's
Yeah,
call it.
it will come out of the dealer's money because it's his obligation.
Well, why is it his obligation? He's all, it's not his obligation, it's the bank's obligation. The bank's pre-fund, the bank's paid him, the bank's paid him 80% of his monitoring charges over the life of the lease.
That's
So he's
correct.
taking a 20%.
That's how they collect their income.
He's taking a 20% hit on his monitoring charge. And the dealer is still expected to pay the monitoring charges over the life of the contract.
That's right. But remember, it's the dealer's obligation. He has the contract, your contract, that he's using, and that contract requires him to pay the monitoring and the pass-throughs, and he does.
Well, that contract also calls for monthly payments from the customer, which now are going to be going to the bank. So yes, the alarm company, the alarm company, then going back to our example, the alarm company is going to get paid $3,200 up front on a $4,000 deal, roughly.
Right.
And out of that $3,200 over the next 36 months, the alarm company is going to have to pay the central station.
No, we do a lump sum.
So they're going to pay the central station.
They're getting all of their monitoring. They're getting all of their monitoring less the discount as a gross amount, along with the installation money. We pay the monitoring as a lump sum.
So when you say if the alarm company is going to get take a 20% hit, on top of that, you're going to deduct the central station charges, or the central station charges are calculated within that 20%?
No, the 20% is the bank's interest. Let's look at that for a minute. If you look at you're using 36 months in your suggested model.
Right.
Okay, that's 20%. So that's about 6.8% per year. No one is going to take on that kind of loan for 6.8% per year.
Well, wait, Tony. What I'm trying to understand, the alarm company comes to you and he says, "Okay, I'm in. I got my first deal. Here it is. It's a residential. It's a 700 beacon score. It's a $3,000 installation and $30 a month for 36 months. It's $4,080 total on this contract over the life of the 36 months. And you turn around and say to them, no problem, here's your $3,200. We took 20% off the top and gave you $3,200. Is that what the check that the alarm company would get?
The $3,200 less the monitoring cost.
Okay.
Which we give them an opportunity through the central station agreements we have to lower to $2.
Okay. Well, now wait a minute. So if they go through you, because one of the questions was, can they use their own central station? So that's a question that someone wants answered. So the question is, can they use their own central station, or do they have to use your partnered central stations?
We push very hard for them to use our central. Why?
Okay.
But let me tell you why. The reason why is because we manage that relationship actively each month by checking to see where the customer is on their payment schedule with the bank, checking to see if they've got customer, if the central station is having problems with that customer. So we do that work that no one else does.
Okay. All right, but wait, it's still
make sure we got a solid deal every month.
it's still not a deal breaker. They can use their own central station, but you're going to strongly suggest they use your partnered central stations, who you've made a very good deal with at a very good rate, and there's added benefits to it. So I think that's the right answer, correct?
Yeah, that is the right answer. But like anything else, if the deal is big enough, we'll find a way to bring the other central station in and make them part of our
Okay. Okay, but the other part is this: based on your model, there's $72 has to go to the central station. Now you're going to deduct that that's $72 from the dealer, from the 32. So instead of getting $3,200, which is the 20% of the deal, you're going to deduct the $72, and you're going to send that to the central station.
Right.
Now, what about, so that's the only expense that would come off there, I guess. The service.
Pass-throughs would be included as well.
Right, okay, but those would be.
Alarm.com.
Right, correct. Third-party vendor charges would be added onto that too. Also for the life of the loan, life of the contract, not just month by month. Okay?
Yes.
So the customer is now paying the bank for 36 months. Maybe they've called the alarm company for service because they're told, call us for service if you have any, right? The alarm company's been paid. If it has a service plan, they've gotten 80% of their money up front already. And if it's a per call relationship, then they're going to just charge the customer for any service work that they do. Well,
correct.
Okay.
Correct.
Meanwhile, the customer is paying the bank each month for 36 months. Now, the 36 months goes by, and what does the bank do with the customer and the dealer? How does that transaction work towards at the end of that bank relationship?
At the end of the bank relationships, we notify the dealer. Actually, we notify him 30 days in advance that it is now time to start to process a renewal on that contract.
Well, the dealer can also just allow the contract to go month to month and do nothing. So, but at the end of, on the 37th month of our model, the dealer will start billing the customer directly, and the monthly charge will be something less than the customer's been paying the bank, because the equipment, the installation side has been paid off at that point. Presumably.
That's correct.
Presumably. I mean, some alarm guys may want to try and they may want to try and keep the same payment going. So, well, someone writes here. So essentially, the dealer takes a 20% hit to get paid up front for the 36 months. The dealer pays everything with the 80% balance that's left. Well, well, they pay everything. That's true, except that you're taking more than the 80,000. The 20% is going to be taken off the top, and the monitoring charges are going to be taken off the top. You're going to be prepaying those as well. So you're going to get somewhat less than the 20% or the 80%. You're expecting 80%. You're going to get a little bit less than that.
Okay, Kim, they saved the money though. I mentioned that in the presentation. They saved the money on the monthly billing.
No, Tony. There's obvious advantages to the program, and one of the advantages is, depending on the competition level in a dealer's area, territory of where they work, the obvious thing to do that a dealer does very simply is increase his charges by 20%. And now he's gotten everything back. He's 100%. Okay. Now, if he can't do that, that could be a problem. But they understand that they're taking, as long as they understand up front what hit they're taking, the 20% expense, as long as they understand that, they can factor that into their numbers before they agree to do a job. It doesn't make much sense for them to price a job and take a loss. That doesn't make any sense for the dealer. Okay, and it wouldn't, and it certainly wouldn't work out with a bank.
They're going to determine what the monthly amount is, and they'll take their monitoring and take their installation and combine it, and they're going to come up with that monthly amount, and they're going to adjust that monthly amount up or down, maybe to do something as simple as rounding it off so it's an easy number. But they can also add a little bit to it to protect themselves from a portion of that discount. And the bottom line is when it comes to renewal, they can either renew at that monthly amount because the customer's used to paying it. They've been paying it to the bank. Yes, you're right. The equipment's paid for, and they've collected all of the first 3 years up front. And if you look at what's going on in the alarm industry now from the standpoint of dealer programs are with all of the recourse that they have and the fact that they're so restrictive and that while they pay the monitoring because they're collecting the monitoring revenue, the chargebacks give them about a 35 times. And even with the discount, we're paying them more than that. And
you have a question. No, it's a good program. You don't have to sell this. The program, Tony, the program sells itself. It really does. Okay. The question is, can the dealer get enough in his territory to cover this 20% discount? That's the question. If he's in such a tight environment, a jurisdiction with competition, they might not be able to survive with that 20% hit. But if they're in an area where they can, then this is a great product for them, a great alternative for them, because first of all, they might be able to just tack on that 20%. Here's a question from one of your attendees. Does the alarm dealer need to also have an agreement in place with the monitoring center? Is there a minimum account base that is required to use them? I'm sure the answer to that is yes. Yeah, you're going to have a dealer agreement with the central station.
Oh yeah, there's got to be a dealer agreement, but the answer is no. If let's say they've got 1,000 accounts with cops, and they come into one of our centrals for the financing, that's all they have to do is put the ones that they're financing into our central station.
Right.
Cops, they don't have to put any more than cops, or they have to move the ones from cops.
Right. Can commercial customers qualify for funding?
I'm sorry.
Will the banks fund commercial customers?
Yes.
So this will work with commercial or residential, but does the commercial customer need to own the property? Or they don't need to own the property? Can they be a tenant in the property?
Try me again, please.
When you say a commercial customer, so most commercial customers are tenants, or a lot of them are tenants. So will the bank fund a tenant as opposed to a building owner, property owner?
No. That's the difference. We can do commercial, but let's just say there's a partnership that owns whatever the business is. As long as one partner is qualified for the loan, they can do the loan.
No, that begs the question. When you say if they're do they have to own the property where the alarm's being installed?
No.
No. So you'll fund it.
A homeowner, yes, but when you're dealing in the home.
But commercial, no. And is it the same 20% discount?
Yes.
Yes, it is. Okay. And it's also non-recourse. Okay. So how does the transaction, wait, what about taxes for installed equipment? Who gets the taxes? If taxes are included in the price, that's not discounted, is it?
Well, the installation is the installation, and that includes any if they're paying sales taxes. Is that what you're referring to?
Yeah, if there's a tax on this, yes, if there's a sales tax on any part of the transaction, I assume that comes back to the alarm company, and it's not discounted.
That's correct,
Okay.
because they're responsible for paying ADI for the installation, the equipment for the installation, and responsible for paying an installer to do that, as salesman for the
Right.
commission.
Well, but they have to pay for the sales tax comes back, is not discounted. Or will the bank fund fire alarms as well as intrusion alarms?
Yes.
Okay. Does the equipment price fall off eventually? The answer is yes, once that loan is paid. Either the loan's 36 months or 60 months, and after that the payment drops because you're no longer factoring in the installation and equipment price. I'm sure that's the right answer.
That is the way I would do it, and right. But quite frankly, I'm sure there will be those dealers who will just renew at whatever that monthly has been.
Now they say that they want to know, will there be a credit pull at the beginning and then a soft credit pull at funding? Is that?
It's the reverse. There's a soft credit when the salesman is on the doorstep with the customer. It's a soft credit pull, so it doesn't affect his credit pull. It does, and it does give enough information to the bank that they say go ahead or don't go ahead.
Okay.
So yeah, it's a soft pull on the front end.
How long does it take for the salesman to know that they've been approved on at least on the credit level?
We'll take them through training, but it takes they shouldn't let it take very long.
I'm talking about each transaction. Salesman comes to my house, wants to sell me an alarm system, and says to me, by the way, I can get it financed. And I go, okay, great, let's do it. And then he leaves my house and he calls you. How long does it take you to get back and say, no, this guy's a deadbeat, or no, you can fund this guy? How long is that going to take?
It's all done with an API in a computer on the front doorstep with the customer.
So it's right then and there. The salesman's going to know whether or not this customer can.
And if the bank says no for whatever reason, then the customer the salesman can move to the secondary financing, or they can just go to a standard financing that they normally have done in the past. So
they can also just do a regular. They can do a deal with the homeowner with no financing, basically. Okay.
Correct.
Any upfront cost to join the program?
No.
Okay. And the minimum FICO score, I think we answered that. It was 680. Would be
no, not for the dealer. Not for the dealer. The dealer, we go down much lower than that.
Oh, the dealer has to have a FICO score too?
We check the dealer because it does us no good to bring in dealers out there who shouldn't be doing this. And
Tony, I'm a United States bankruptcy trustee for almost 50 years. I guess you don't want me sending any of those potentials to you.
I'm sorry.
I said, I don't know if you knew, I'm a United States bankruptcy trustee for the last 50 years. And I guess you don't want me to refer any of those inquiries to you.
Yeah,
Okay.
the dealers that asked me, I said, if you've got a 550, I don't have a fixed number, but if you've got a 550 or better, I see, and you don't have any bankruptcies or any other key metrics that disturb the bank, you'll have no problem.
All right. One attendee wants to confirm the customer, the client pays the bank direct, not the alarm company, and that's correct. The customer is paying the bank.
That's correct.
Okay, and the bank's bill, and well, and Tony is the one sending out the bills, I take it.
Right. When the money comes in to our account that covers the payment to the dealer, the payment to the monitoring, the payment for pass-throughs, and that comes into us, and then we take care of those obligations.
So the customer is actually paying security funding. They're not paying the bank, Citibank or so. They're paying you.
The check is going to the bank directly from the customer,
Oh.
and they don't even know we exist.
Okay, I got it. So they're paying the bank, whatever it is, whatever Citibank or whatever bank you're using. I got it.
And in the past, we've had some problems because customers didn't know that the alarm dealer was financing his receivables,
Right.
and they kind of objected to the fact that their receivable was being financed, and they could tell it from the standpoint that the credit card pull was each month indicated that. Well, when they in our deal, they know they're doing a bank loan, and they know there's no interest, and they know that there's no down payment, and they know that that bank is going to be getting their payments.
Right.
It's all very clear above board, and the customer is a happy camper.
All right. And I think I asked, one question was, wanted to confirm the dealer gets the account back after the 36 months. That's absolutely correct. And does the transaction work when the loan is paid in full or the contract ends? How does the transaction work when the loan is paid or full? The bank, I guess the bank notifies the alarm company, and the alarm company starts taking over the billing, I take it.
Yeah, the alarm company takes over the billing just like they would if they had financed another kind of financing for the customer.
Okay.
And we will notify them that
Okay.
they need to renew.
All right, and we covered taxes. The taxes get charged on the account are going to be paid back to the alarm company in full, so they have the taxes to pay as it passes.
Yeah, Ken, you've made the alarm world very aware that the rules are changing relative to renewals, and so we're all going to work together to make sure that none of us violate those rules.
All right. Who pays bank or alarm company? I guess the sales tax is going to get paid by the alarm company, not the bank.
Correct.
The alarm company, they're going to get the sales tax, and they're going to make the payment for it. Do you have a proposal tool? I assume this is a request. Do you have a proposal they could use with the customer? I hope that's on the financing end and not the alarm services end, because you don't want to get your contracts from a bank to do security work. Let the bank worry about their own financial papers, which is perfectly fine, especially in this situation, because this is non-recourse. So any problems with that paper is the bank's problem, not the alarm company's problem. That's why I'm very, very happy to endorse this program and say, go ahead. It seems like a great deal. Just make sure your arithmetic works.
Yeah, here's how we handle that last question. We have to find out what they're currently doing, and then it's better for them because they've got to train salesmen. The training issues can be extensive when you have a bigger company. So just automatically flipping to doing a marketing campaign that involves a monthly amount only, and then a package of equipment that goes with that monthly amount, and then some pricing if you add doors and windows or whatever, what that might be in addition, so that they can come up with a final proposal to the customer. But the answer is yes, we'll help them put that together.
Well, there's the next one. Does the dealer salesman need any special equipment other than a loose tongue? Probably not. You're going to have paperwork from the bank, that's for sure, and you're going to have your company contracts.
No, that's not true. There is no paperwork from the bank. It's all in a computer. You use a laptop computer.
Well, there's no paper, but there's plenty to get signed.
Oh yes, absolutely.
Yeah. Okay.
But it's all in the computer.
Yeah. So the salesman's going to be trained on how to get all these papers, all this paperwork signed. And if you thought getting an alarm contract was tough, wait till you see the bank paper. But that's okay. You're good to go. You get the signatures, turn it into the bank, get your check, and do your installation. By the way, when does funding come? On the contract or after the installation?
It has to be after the installation. Although we will do a 20% advance on the equipment, because sometimes, and I think I mentioned in my presentation, access control or cameras get to be a pretty big number, and so we'll advance 20% to the dealer. And then
I'm starting to rush because we're out of time. My producers are calling me, as they say on TV. SFA, is SFA paying the central station for the 36 months up front? No, the dealer is. The dealer, now I don't know if the dealer has to pay it up front, but the dealer has the money, and it's the dealer's responsibility to pay
the money in most circumstances.
What'd you say?
On their behalf. That way we know it's done.
Oh, so you're going to deduct the money and you're going to pay it to the central station?
Yeah, out of his money he's got coming, we will make those payments, and things can be negotiable, but
it's a nominal number, really, when you think about it in the scheme of things.
Once it's done, and nobody has to worry about it.
Right, got it. Okay. And this is our last question. Can the monitoring agreement be sold before the end of the financing term? Chances are you're going to have a pretty tough time selling that contract. I suppose you could, but someone would have to be willing to buy it. In other words, does the bank care if the alarm company sells?
What you have is a lot of unearned income, and what you do as you know, in a contract for sale, is to take that unearned income and subtract it from the sale price. So right. if he builds his business with, let's say, 5 years of heavy duty loans like what we're talking about here, he's going to have a lot of unearned income. And
you know what? It's not worth discussing, because honestly, I don't see you being able to sell it. You might be able to sell those contracts in a bundled way, the way a bank sells its bad paper, pennies on a dollar. I don't think it's a practical way to sell alarm accounts. And why? Because there's no revenue until the 36 or 60 months are up. It's been prepaid. So I don't see you being able to sell in the traditional alarms acquisition model. You're not selling these accounts, I don't think. That's almost double.
I'm not going to disagree with you, because I know if nothing else, it's going to be damn hard.
Right.
The point here is we're looking at a way for the alarm dealer to grow his equity, not sell it off. And
well, I'll tell you what you can sell. You can sell, and it's not going to be sold on an RMR basis, because you're not getting any RMR. That's already been paid to you by the bank, and the money's going to the bank for the life of the contract. What you might be able to do is sell a per call a service or inspection relationship, because there is anticipated revenue coming. But that's a whole different conversation, and we don't have time for it.
Let me tell you what my answer is to to the point you made.
Yeah.
My answer is, I agree with you that it's going to be difficult to sell. So let's assume you don't.
Right.
You do transition those accounts to the buyer of your other accounts, with the idea that as each one comes up for renewal and they renew, that you get your multiple then.
That's a different thing. That of course, that's different. That's reselling them a second time. First you sold them to the bank, basically on financing, and then you're selling them again.
No,
Here, what if we're using another set?
You use some what we think is bad language here. We did not sell them to the bank.
I understand, but all right, you financed it with the bank. I got it.
We still have the contract.
You financed it with the bank. I got it. As a matter of fact, if there's a loss and the account wants to sue somebody for it, it's going to be the alarm company, not the bank. So that's why you need a proper contract with the customer and not just the bank paper. Be very careful. Do not just use bank paper with the customer. And if we're using another central station, how would that work? I don't know if we would want to get into that, but obviously SFA would have to pay the other central station if they were willing to do it. You know what? Can you use another central station? I don't know. Do you have? Are you going to process 500 accounts a month so that SFA wants to deal with it, or do you have 2 accounts that we're talking about and they don't want to get involved? or can they call your central station and make the same kind of deals that they already have with other central stations? Okay, that's a topic for another webinar. We'll have to bring Tony back when he's willing to share his video with us. Tony, you can get dressed now, now that the show's over, and show yourself, okay?
Thank you very much, Ken. And,
okay, we got
all of the.
I think everyone liked it. We're getting thank yous, and I want to thank Tony and SFS. They are listed on the Alarm Exchange, so you can find them if you can't see his printout of well, he took off his where you can find them, but he's listed on the Alarm Exchange. You can find them. That's it. This is today's webinar. I hope you enjoyed it. Hope you got something out of it. Next webinar is next week. I'm going to be presenting 2 next week, as a matter of fact. And watch for the announcements. We're going to have a lot of different webinars coming out real soon. Tony, thank you again. And you did a great presentation. And it was very interesting. And I think your program's terrific. Okay? Okay, everybody. We're signing off now.
Thank you, Ken.
I got to figure out how to do that because I made you the presenter, I think. I have to take it back. Okay. Okay. Okay, everybody. We're signing off.